Focus, let's straight dive into conversations with the corporates that we've got lined up from the broader end of the market on the show. First, we have Mr. Ajay Singhania, the Managing Director and Chief Executive Officer of EPACK Durable Limited, joining us on the show. Mr. Singhania, hi, good morning and good to be speaking with you. One of your clients, Voltas, has very recently reported crossing 10 lakh AC sales in Q1. On the back of this, talk to us about how AC trends have shaped up this summer since monsoons have been running late, and how has that benefited your business?
So good morning. Yes, definitely Q initially yes, the market has been very good, and the entire cooling products, AC, coolers, everything, we're seeing a large uptick. And based on the inputs and reports till now, we see at least 25-30% kind of growth compared to the last quarter or the same quarter last year. So yes, we see summer and lack of rain and everything, and definitely the market is growing very well for us. And especially the achievement done by Voltas is something being a key client for us. Yes, we see a large uptick there as well.
Mr. Singhania, do you mean 25 to 30% is the revenue growth that you've seen in Q1 so far?
No, I'm not talking about EPACK in particular. The industry, yes, 25-30% kind of increase in the sales revenue and volume is what has been reported in the market. So that's a positive sign.
Okay, and from what I understand, Voltas is it roughly contributes about 15 to 20% of your revenue. Can you give me a number there?
Yeah, so it's amongst the top 2 customers for us, and okay. 25 to 30% is the kind of contribution from Voltas as a single customer.
Understood. So on that note, can you give us a little sense on what your customer concentration is looking like and what the momentum has been? Has it reduced or increased over last year? And are there any new large customers that can materially diversify your revenue away from your top 2-3 brands?
So see, we have been consistently diversifying, increasing the customer base and also the product diversification. So the large domestic appliances for us like washing machines and coolers have also spanned out very well. The small domestic appliances is growing. So all we have increased close to from 55, we have now close to 75 customers in just 1 year. So 20 new customers have been added. Some of really large, and we see good growth potential with them going forward. So as we are definitely reducing our customer concentration year on year, at the same time we are also increasing our wallet share with the same customers. So it's a two-way growth for us, and not losing the customer, growing with the current customers, increasing our wallet share with them, at the same time adding new customers and new products, so that the growth from both sides can be taken forward.
Sounds good. Mr. Singhania, this trend that you're talking to us about, the kind of growth that you're seeing on an industry level in Q1, do you believe this current demand momentum can sustain well into FY27 rather than just be a one-quarter phenomenon? Or do you believe that now that monsoons have started to pick up across the country, this number could go lower?
After a very sluggish and a disappointing 25-26, the start of 26-27 definitely is a very positive sign, and the 25-30% kind of growth I'm talking for the industry seems that it will continue going forward, especially in a quarter wherein a lot of disturbances have already happened in the market. The geopolitical disturbance, dollar going up, import costs rising, commodities rising. Still, the market has been able to pass on those cost increases, and the acceptance of the same is a sign that yes, the growth momentum will definitely continue, because post the stabilization of the war situation, the crude coming down, we believe that as prices start softening, the momentum will still continue.
Okay, so that sounds good. And Mr. Singhania, can you talk to us about what is the kind of pricing action that you've taken? Have you faced any raw material inflation on your end? And have you been taking price hikes? If so, can you give me a number on that front?
See, very broadly speaking, there has been a price increase to the tune of 15 to 20% compared to, let's say, the end of 25 December quarter to, if we today, there has already been an increase of 15 to 20% in each of the air condition category we talk about, on 2 counts. One, definitely the commodity increases, dollar inflation, and also the BEE increase. So the revision of star rating also contributed to increase in the cost. So both increase were passed on subsequently in quarters. And today, as we stand, I believe that almost entire cost increase has been passed on to the market. And now we expect the prices to soften, and definitely the margins should improve in the next quarter on.
Right. So on that note, Mr. Singhania, I remember in the quarter four con call, you did highlight having potential 500 to 1,000 bips margin pressure on the back of delayed cost pass through. Now that you're saying that you've taken this 15 to 20% price hike and that has entirely been passed through, would it be safe to conclude that this 500,000 points pressure is now behind you and maybe we will not see that kind of pressure on the margins in quarter one or maybe even going ahead?
Definitely, yes, and that's the kind of sign we are getting as of now. So we expect prices to further soften, especially the commodity prices. Already the trend is showing that, and as we move forward, we definitely believe this will lead to certain improvements in the margin.
I know quite premature to say this right now, but by the end of FY27, are we looking at crossing 7% again?
Definitely, yes. That's the kind
Okay.
of expectation and the line in which we are working. Looking at the current situation and the kind of order book and projections we are getting from the market, we are very hopeful that the growth momentum will continue throughout the year, and definitely 26, 27 will see the AC market again bouncing back to a growth trajectory.
Okay. And in the con call, you also did say that you're aiming to double your revenue in the next 2 to 3 years. Are you on track for that?
Absolutely, yes.
Okay.
Absolutely, yes. And the entire management is working in that direction.
Okay, so good on that front. And also talk to us about your capex plans. This amount has been at 70 crore over the last 18 to 24 months. What's the plans on this front going ahead, and how will they be funded?
So most of the capex which we envisioned in FY 25-26, so we had envisioned almost close to 354, 400 crores kind of an investment in 18 months. So almost the entire investment has now been completely done. So this balance of close to 50 odd crores, which we will complete in next 2 quarters or so. And then onwards, we'll start realizing the additional capacities which we have created. So we will see the benefits of the additional capacities flowing in from the end of FY26 and then carrying forward to 27-28. So for next 18 months or 24 months, we are not looking at any new major capex, and rather whatever capex was planned has already been done. And so now it's time for us to start reaping the or getting the benefit out of the investments which already been done.
Okay, sounds good. And lastly, Mr. Singhania, before I let you go, talk to us about your inventory position. You had earlier said that you're looking at inventory normalizing by quarter one. What is the inventory position on ground looking like?
So that's, I think, the best part of this quarter, the increased sales and all the inventories have largely normalized, and we are not at component level. If we see or at the trade level, yes, the inventories are well within the desired norms, and even at for us, the component inventories are well within control. So yes, that's a very positive sign. The kind of sales which we are seeing in this quarter are definitely helping us liquidate most of the inventories.
Any conversation on the PLI front? Any new developments on that front?
So we are the part of the first PLI for air conditions. So this is the last year for the PLI. Getting the benefit last year, we have not accumulated any benefit out of it. That's still under discussion with DPIIT. And this being the last year, then onwards we are definitely on our own. But the support for the past 5 years, including this year, has been tremendous, and we have already seen the industry doubling in last 4 years. So I think the objective of the PLI has definitely been achieved, and the competitiveness which was envisioned while drafting the policy, I think, has definitely helped the industry grow and achieve a scale of Atmanirbharta what was already planned.
Sounding good. On that note, Mr. Singhania, thank you so much for your time. It's been a wonderful conversation. Hope to keep interacting with you frequently. Thank you so much. Okay, viewers, on that note, it's time to slip into a very short break. On the other side of the break, we'll be going from one management to another, and we'll be speaking with the management of Sai Life Sciences on the entire CDMO opportunity that India can capitalize on going ahead, given the developments that we've seen between Washington and Beijing. On that note, time for a quick break. Be right back.